Hey guys, Mike here. So, oh boy, what a day in the market. And yes, it was definitely one of those red days. And should we be surprised? Probably not. And then, the question is, of course, what caused it? Oh my goodness, the market sold off so much and all this other good stuff. And it wasn't just one thing, it was a couple things happening here, okay? And we're going to get into all of that and stuff. And I will say the big main thing is, at least the narrative is, the banking system is in trouble. Oh my goodness. No crap, right? I mean, look at the look at what's going on, how fast they're raising interest rates, all this stuff happening. And so when I say banking system, we're talking about the regional banks. But of course, when you look at this, I'll show you if you don't know what I'm talking about. This is what I'm talking about, and I posted this in our Discord here. I'm just going to click on it. And this is from our friend Charlie Blale. He kind of sums this up. Well, let's see what happened here. Let me see. Regional banks. Wow. PacWest down 29%. Metropolitan Bank 27%. Just look at how far down these stocks are, right? This is in one day, by the way, if you didn't know this. And I mean, they got absolutely freaking steamrolled, right? And the question is, why? Why today? I mean, think about this now. Last week, even the week before, they reported earnings. I showed you the regional banks that reported earnings, right? And yet they didn't sell off. I even showed you where a lot of the ETFs that hold these banks were green while First Republic was red. Okay, that was kind of interesting. Like, what's happening? Why today? I don't get it, really. And it's like, what's tomorrow? Well, FOMC, right? This is called, we're going to send you a message. Because think about this. Wouldn't it have made more sense for you see a day like this in regional banks when another bank actually was fixing to go under into receivership over the weekend, so maybe on Friday, or maybe even on Monday yesterday, right? Like, wouldn't that have made more sense when, of course, all those people who own that stock in First Republic lost their money? But no, we wait till the second day, right before FOMC, right? Trying to send a message to the Fed, you better quit raising rates and you better go ahead and put some kind of messaging in there about a pause or something, right? Something to do with monetary policy. It's not a coincidence. There's no way that is a coincidence. Let me know in the comments what you think. Now, the other thing is, and again, I showed you this chart before. This is nothing new. I told you the banking system or banks in general are bad business. And we've been going through this consolidation for years now, right? We had 14,000 and something in the 80s. Now we're down to 4,100. Right. Now, the other thing that's scaring people about the banks is what Charlie Munger said yesterday when he says he sees more pain ahead with U.S. banks because of all the bad commercial loans. Now, of course, this shouldn't shock you because I have talked about this. I know everybody acts like it's a surprise. I brought it up 2 months ago, and I was like, the commercial loans, oh my goodness. You got office buildings that are 50% empty, for crying out loud. You got companies literally walking away from the office buildings, handing the keys to the bank saying, see you later. Because they're not going to try to refinance a loan. They don't even know how to value the office buildings anymore, right? Because of how high the rates are. They don't even know if they can get them filled back up. They don't know if they're going to have to make them into condos or something or whatever you can make them into at this point in time. And so, that's another problem. But the other thing is, think about this. Who is famous for buying when there's just fear all in the streets? And who's especially famous for investing in banks? It's Warren Buffett and Charlie Munger, right? But you don't see any of that right now. Again, we'll know more what he's been buying, but we ain't heard nothing about that. And like I showed you Warren Buffett's video a couple weeks ago, and he said, oh, there's going to be more bank failures, right? Because we hadn't even begun to see the brunt of the commercial loans. But the thing is, most of them aren't even due until 2024, right? So who knows how long that's going to linger on for. And remember, for those who are new, the regional banks make up 88% roughly of commercial loans, okay? And so you got to keep that in mind. And so that's the part that hurts, right? And that's why I think I showed you yesterday with the FDIC is thinking about increasing what they will cover on things over 250K, but business accounts, right? Because they don't want them getting pulled, because that was the thing with First Republic and all of these banks. They got a lot of uninsured money in there because they do so many commercial loans, things like that. So they have a lot of companies that use their banking system, but a lot of their accounts are over 250K, and they don't want them getting pulled, right, and shipped to the major banks because that will obviously hurt the regional banks. The other thing that's going to hurt, and again, this is just wait and see. That's all this is, because we got to wait and see. Like, hey, and think about this: if you knew you're watching, people, other banks go under that are about even bigger than you, by the way, going under, right? Are you going to be more willing to lend money out, especially in the commercial side of things when you see what's going on with the office buildings and warehouses and things like that? Or are you going to be more apprehensive and want to keep it there and then just park it at the Fed, right? That's what you got to ask yourself, and that's what you got to wait. That's the long game, to wait and see how that's going to affect the economy, because that obviously takes time to roll through. That is obviously a way of taking the liquidity out of the market, because it's just not going out, right? Like it should be. So we'll have to see on that. But again, a lot of people will be listening to Warren Buffett again, because he is considered an expert in banks. He's probably bought and invested in more banks than anybody else out there. And him and Charlie are like, I think there's going to be some more pain. But you can bet when all this is said and done, who do you think is going to be scooping up banks? It's going to be those two. You can almost guarantee it. Now, some good news in a way for the Fed, that is, and for people who think there's maybe going to be a soft landing or whatever, we'll see. I don't think that's going to happen. But you had a lot of job stuff come out today, right? So you got layoffs are increasing, right? We know that. Then you have the job openings decreasing. So that's actually something the Fed wants to see. That means the labor market is actually softening. Then you end up with U.S. quits rate actually decrease down. So you have less people actually quitting their jobs now, maybe because there's not as many jobs out there, or more people return to the workforce. We'll have to see on that one. So that's something the Fed actually wants to see, right? And then something the Fed doesn't want to see, or is tired of seeing, is this is the lowest paid Americans and how much their pay has increased. And supposedly it's increased the most, which of course means, guess what? It wouldn't pay that much. If you're making $9 an hour and they increase you to 15, that's a huge increase, right? To flip burgers or whatever it is you're doing. Okay, and then of course you got the top 10% earners down at the bottom, and then just barely above them is the median average, or maybe you want to call it the middle class in a way. And technically it's not, but it kind of feels that way, right? And one thing that'll surprise you, if you ever wonder if you're middle class or not, the range is huge. Depends on different by state, but believe it or not, if you're single making $26,000 in Florida, you are considered middle class, okay? And as couples, as a family, if you make $37,000, you are considered middle class in Florida. I don't know about, you see the other states, it varies by the state, of course, but, I don't think most people would have thought, and trying to live off in this environment, $37,000 as a couple, which most likely you probably have a kid or something, you wouldn't think that's middle class, but when I keep telling you middle class has been just absolutely crushed, this is what I'm talking about right here. This kind of sums up the picture of that. And of course, when it comes to the earnings increases, you see where we're at on that chart and stuff. And so let me know your thoughts on that right there. And before we continue on, if you can just hit that like and subscribe button, I sure would appreciate it. It helps out the channel a lot. And if you like this kind of content, don't forget to hit that subscribe button. It's very important for you to get notifications when these videos come out. Appreciate it, guys. And I got to tell you, I don't know if the world's coming to an end or not, but when I saw this come out today, I was just stunned. And so let me know what you think in the comments on this one. But check this out. AOC and Matt Gaetz, who couldn't have less in common, team up to introduce a bipartisan ban on stock trading in Congress. Now, of course, I don't think this is the first time something like this has come up, but the fact that it's those two, doesn't that show you how desperate things are up there? It's like, that would be nice, but put in the comments, do you think that stands a chance to even get a vote on the floor? That's what I want to know. I will say, of course, say absolutely not, because we know up there, they're like professional traders. They trade more than anybody I've ever seen, right? And so, but at least they're trying to introduce something. We'll see if it goes anywhere. Wink, wink. We all know. But when you look at stocks, I'm not even going to go into individual charts here, just because this is going to change immensely tomorrow. But you can see right here, I mean, here's your big boys. Google was down, but then AMD and Amazon held up, right? AMD just reported earnings. I think they're down like 3% maybe. But then you look at Apple and Microsoft. Microsoft was mostly green almost all day to the very end, I believe, right? Tesla held up better than expected, because I'll show you in just a minute why. And then you have Apple as well, and I'll show you another thing on them real quick. But then you got the SPY, and of course the worst performing today was the Russell. It was down almost 2%. So small caps continue to get crushed. And I'll tell you what, man, the shorts just keep piling into the E-mini S&P 500 futures. I mean, absolutely shorting the heck out of this thing. Again, we hadn't seen this since 2011. And so that is, let me know what you think about that in the comments, but they just keep piling in. So they're expecting something here. And Tesla, of course, held up well today more than anything else, because guess what? They changed prices again. They actually did some increases, small increases, but of course, if you take a small increase and you multiply it by thousands of cars, it actually ends up being a nice sum of money. It could go to the bottom line. We'll have to see. But the market loves when they increase, and they don't like it when they decrease, right? It depends on whether or not you're in that camp of let's gain market share, or actually hit some bottom line and some financial targets. Now, Apple, starting off good here, right? I told you they had that new high yield savings account. Well, suppose they brought in like $1 billion in deposits over its first 4 days. And so, of course, that's not bad for Apple. What a good start, right? I mean, you know, all they need is more money coming in, right? And I like this for a good laugh, and it was like the strongest thing on earth: a dung beetle, a gorilla, a 440 grade stainless steel pipe, diamond, a hydrogen bomb, and then you got Nvidia stock, right? And it was down 2% today, but this is, again, I showed you yesterday. Every time people keep trying to short this thing, it just keeps going up. And again, I'll bring back the individual charts tomorrow after we get the FOMC mess out of the way, because that's usually when we find a direction of where we might be heading and stuff. So hopefully you can understand that. Now, earnings, of course, not really a lot of big ones in the morning is going to shift anything, but you do got CVS Health, which I believe has been a mess so far, some oil companies, but then in the afternoon, you'll have Qualcomm, so another semiconductor company. Etsy's absolutely been horrendous lately, so we'll see if that keeps going on. And so then you got economic data, and there's going to be a lot of mortgage data, but, you know, S&P 500 Global Composite PMI, and then especially the services. Pay attention to the services. It's projected to actually increase. Then you're going to have ISM services, new orders, the employment, the business activity, services PMI, and of course, what matters more than anything else, there it is. The Fed interest rate decision at 2 o'clock, and then you'll have Jerome McDaddy. Then you'll have Papa Jerome Powell speaking at 2:30. And all everybody's going to be listening for is there any kind of talk, or can we grab onto a pause? Is he going to mention, okay, we're not going to raise rates anymore, or is it going to be the same? We're going to be data dependent, right? That's what the market wants to see. Remember, it's projecting 3 or 4 rate cuts this year already. And so if we raise tomorrow, right, which everybody's expecting, it's like a 90% expectation rate of that. If we raise tomorrow, what's the language going to say? And so that's what everybody's listening for. If it's considered hawkish, i.e. he says the same thing over and over and over, like he said in the past, then obviously markets can move down. That's what you would expect. And that's what I keep saying, like, what's going to happen if the Fed doesn't actually start to cut rates this year? And so, you know, how is the market going to react? You can't imagine it's going to react very well, right? So, because that's what they're expecting. Again, the Fed does rate cuts when they see stuff bad on the horizon or something has happened. And nothing scares the Fed probably more than a credit crisis or a credit crunch, so to speak, right? And so that's what we'll have to see. That's what I told somebody in the Discord. And that's what the message is today, sent to them. Like, if you keep going, look what's going to happen here. And so, you know, we'll have to see how it plays out. Let me know in the comments, do you think they're even going to mention the word pause at all? Or just say the same old, same old? All right, so we'll see what happens. I will be here to report it. I'll record the most, you know, edited version of his speech and everything for you guys to see and stuff. But the one thing you know is going to happen tomorrow, because it happens almost every time, a lot of volatility. So, you know, let's be buckled up, click, and ready for it. So anyway, hit the like and subscribe button if you got anything out of this, and I'll see you tomorrow.